Learning Unit 5, we start with Learning Unit 5. You might just look at your Learning Unit 5 and say, wow, it's too long. Yes, it is long. This is what tertiary education is about. It's different from, high school, is that it's quite lengthy. But you also need to feel which information they want to give you, that is just information. They want just you to understand something, because they are not going to assess every single point of this learning unit. So, and and I trust that that is clear. We assessors don't have the time to assess every bit. No. But what you need to understand is that when you read, we want to see if you understand, you are able to take that information, and that's why, and use that information. And that's why I believe that this module is the best module that you can have, because it is practical. Whatever you're reading must make sense when you are doing the actual calculations, right? So I hope that that is clear. So don't panic when you're seeing such a long chapter. But what I'm doing, the annotation part that I'm doing, is important, because sometimes when you are looking at the calculation, you don't know which number speak to this number. So I don't want you to stand in front of an example. You can't figure out, wait a minute, why did they take this number, why did they take that number. So that's the reason why I do this annotation, to give you some sort of guidance, right? But look, the theory part, you understand what inventory valuation is just the process of assigning cost to the inventory. Very easy. Inventory valuation, we are just assigning cost. And this is important. Remember, especially you as an entrepreneur, you need to have basic understanding of whatever business you're going to be doing or involved in. You're going to be working with cost. It must make sense, especially as an entrepreneur. You're going to need to ensure that whatever you are doing is calculated and makes sense. All right. So there is material, obviously, that enter the production. All right. I started talking already about that when I was covering the assignment, and I was saying that you have the actual production or the actual service that you are providing. So if you are a fast food, you are providing food, you see. So there is the actual uh, uh, um, making of the food, cooking the food, packaging the food, everything that goes into that production of the actual product that people are going to use to buy from you, to purchase from you. That's the part that we call the production. The production, in this case, we looking also at the manufacturing. The manufacturing, there is two types of businesses, if I can put it like that. The manufacturing kind of business and the service. That's why you hear the word service provider. You are providing a service, you see. Maybe you are in the hotellery business. Client comes to a hotel, they are received, there is hospitality, that is part of the hospitality industry and all that. That's a service. It's not an actual product that is being manufactured, but actually an experience that is being provided. I trust that that makes sense. But the manufacturing is one of the the main sort of business that deals with cost. There's quite a lot of cost involved, and it's if you understand on the manufacturing side, you'll be sorted for all other business, right? So enough with that. This is basically the brief of the chapter, is that you're going to have direct material that are going to enter the production. You are going to have direct labor, you are going to have indirect material and labor. All right. So there is the primary material, the raw material, which is the direct material. For example, on the inventory side of things, that's what you need to understand. You need to look at it as material is entering, is being purchased, uh, it's ready to enter the production. It has not yet entered the production per se, but we need to purchase it, we need to acquire it, we need to get that material. And then there's the work in progress, where now that material enters the actual production, and then after that we have the finished product. All right. So some of the definitions are very important. What does normal stock mean? This you need to read. What is buffer stock? All right. We have material that is entering a production. We need to have a constant inflow of material if the production needs to be also constant. So it's almost like you are feeding a machine with things. You need to have, let's say, coal. You are feeding a locomotive with coal. You take the coal, you put it into the burner, and then it burns the coal, and then it generates power. All right? That's ESCOM, for example. They are generating electricity. They take the coal, they put the coal. So they need to have a supply of coal that enters. So when we say what is buffer stock, it means that we need to ensure that there is that supply of coal needs to be maintained so that we can produce, we can generate the electricity. So there are things, if we don't have that supply, we're gonna break down our production. So we're not going to be able to generate electricity. So that's where buffer stock, safety stock needs to be understood. What is the buffer stock? Buffer stock speaks more of everything that you need to use in order for you to produce, but safety stock will deal with a specific raw material, and especially the most important raw material that you need. Okay, what does speculative stock mean? Why do we need to make sure that we have a reserve? Because of speculation, because we know speculation can hike the price. And so sometimes we need to make sure. So you understand that the concept of this is to make sure that the production is taking place. That's all. Obviously, you can overstock or you can understock. You can overstock and you can understock. All right. So as you can see there, these are just definition. But what is an average stock? Obviously, there is an opening and a closing stock. We divide it by 2. That's your average. Or what you could do is you could take the size divided by 2 plus the safety stock. Right. So this, I'm just touching on the definition. I put some few notes on one side and another in case you're struggling with. But what I'm highlighting is the most important concept that you need to wrestle with. That's what I'm highlighting. Is that if you need to understand, please don't forget to look at what is highlighted. This is important for the calculations that you're going to be doing. All right, now we come to the main part of this tutorial. We have first in, we have first out, we have weighted average method. These are ways of valuing the inventory. So one can ask, what is the difference between inventory valuation, meaning how we value inventory and inventory system. The inventory system records the in and outflow of inventory. All right. So this is just, that's why we say it is a system. It doesn't actually uh, estimate the cost. It doesn't estimate the cost. What estimates the cost actually is the inventory valuation. And two methods for each. So you have the inventory valuation, you have the inventory system, and there's two methods for each. You have the FIFO, first in and first out. First in and first out. It means that whatever we are buying, whatever we buy first, that's what we need to use first. That's what we need to sell first. Very easy. First in must be the first out. That's all. And weighted average cost. That's another inventory valuation. But what is the two inventory systems that we have? We have a perpetual inventory system where we know at all time what is coming in and what is coming out. And we have also a periodic when we do the check after a period of time. So we don't know at all time when we're using a periodic inventory system. We don't know at all time, the cost of the inventory because it's not like the perpetual. Two things that you need to remember, very important, is that for the perpetual, you have an inventory account. So things comes, whatever inventory we bring in, we put it in an inventory account. And then after that, when I'm talking about we put in inventory account, I'm not talking about the actual inventory. We are talking about the value, the cost of that inventory. So I trust that that is clear. We are not talking about the actual product. We don't care about the actual product. We care about how much is it. What is the cost? Because we need to know the cost, because if we are to do the business, whatever we're going to sell out there, if we don't make a profit, but how do we make a profit? If we don't make a profit, we are not in business. But how do we make a profit? Profit comes from deducting the selling price from the cost. So that's where we will find the profit. So that's why we need to do the markup. We need to add more than it's costing us in order for us to make profit and for us to be profitable as a business. Who am I telling this? I'm speaking to entrepreneurs. You're going to be an entrepreneur. Obviously, it's not smart to have a business that makes more cost than revenue. If you are incurring more cost than revenue, then your profit is negative. You are not in business. All right? But for you to be profitable, and that's why we need to understand the cost component, because there are multiple costs that might come in. How do you deal with those costs? All right? So I trust that that's clear. Now, I hate talking theory. Let's move now to an example. And as you can see, here they want you to understand how you comprehend FIFO, first in and first out, as a method. Remember, there is a system and then there's methods of evaluating that inventory. But as you can see here, for example, this is quite good because you have a table, it's provided to you, the purchasing. This is the little story, this is the little example. They are telling you that the selling price is 3 rand after making this good, after the marking up this good. So there is a markup, there is an addition. What does the markup mean? It means that we found there is a cost, we adding on top of that cost, all right? So that we can get a selling price. So this is very important, straightforward, markup of 20%. If they tell you markup of 20%, it means that 3 rand equal to 120%. Because the markup is on top of, a markup means that there is 100%, we add on top of that 100%. So a markup of 20% is 120. And if this is again high school calculation, if 120% equal 3 rand, what does 100 equals? All right. Ladies, are you able to see my mouse on the screen? Oh, perfect. Okay, so 100% will be 3 multiplied by 100 divided by 120. Again, high school level mathematics. So the actual cost is 2.5, right? 2.5 there. Okay, so this is what you have. They're saying that this is a selling price. That selling price actually came from a markup. Good information. Just retain it. But there were already units in, and those units we can call that the opening balance. So we started with what? We started with 5,200 units at a selling price of 3 rand. Okay. But the actual cost, we know, we've just calculated the actual cost, 100%, 2.5. So the actual cost, they selling it at 3 rand, but they added up, right? They added up 20%. So we know that the 3 rand is 120 and 100%, I repeat again, is 2.5, right? That, as you can see here. So our balance on day one, I hope you understand. We take the 5,200 rand at 2.5. At 2.5. This is your FIFO. This is the first thing that was in. Meaning that if we have to sell something, we will start with what was there before, right? But then they just tell you easy. On the second, this is the date. The dates become important. On the second, they're going to purchase 2,000 units at 2.75. Exactly. You just put it here, 2.75. And what will be the balance? We will have a 5,200 at 2.5 and a 2,000 units at 2.75. This is how you do with the FIFO. So what do you do? This kind of examples, use it for your practice. Close your book, practice by yourself to see, this is what they're giving me. This is the given. Let me use it and let me try if I understand the concept. So there is no other way than to practice this. But this is easy. This is the part where we're purchasing, one column for the purchase, one column for the sales or for the issuing. And you can see the 8th, they sold 6,000 units. What does it mean? First in, first out. We will start with the 5,200 units that were there before, plus, in order for us to get to 6,000, we need to add 800 units from the purchase of the second. You see, on the second, they purchased 2,000, right? So we're going to use 800 of those 2,000 to remain with the balance of 1,200 units that will remain at this cost, the cost of 2.75. The rest is the same, easy. So if there is a particular cost, you don't know what this cost mean, how did they do this, just follow the links. I've given them to you. One of the most useful thing I've given you, which I want you to go through, is I've gone to provide you this. This will show you for the perpetual inventory system. If you're using a FIFO model, this is the way you do it. If you're using the weighted average method, this is what you do. And then for the periodic inventory system, here again, I have provided you for the FIFO method and for the weighted average cost method. Cool. To you to practice this. If anything you are struggling with, anything that doesn't make sense, all the calculations are in, everything is explained. You see that for example, for the exam, they might, most of the time they're going to ask you for the FIFO, or they're going to ask you for the weighted average. So the thing is, it's not to memorize it, it's to know how. How do you get to an answer? So Anuske, I come back to what I was saying. They just want to know if you can calculate these costs, if you know how these costs flow. So they will always give you a table like this table here, and they ask you to figure out. They might no, not in this way. You might just come in so that I can hear your question, but they might not ask you to compare these two methods like this. But you need to know the methods. You need to know them. But they might not ask you to take to all these. I've put it so that to give you a easy way for you to see the difference between one method and the other. One inventory system and the other. This is just me providing you. So you might not get such a long question, but does it really matter? It doesn't matter. What we want you to know is, do you know how to do this calculation? And this requires practice. So I will ask the whole entire class, take this example that was provided to you, practice it. Do FIFO. How do I calculate FIFO? These are the questions that you need to answer. Answer this question and then come to the solutions and check and see where you're going wrong, what you're not understanding. And if there is something that you're not understanding, feel free to reach out to me quickly. Let's discuss it. But the annotation is here to provide you. Sometimes you might struggle to understand. Wait a minute. This is, for example, an example of this. Wait a minute. What are they doing here? Question number 3, they are asking you on question number 3, the cost of sales. The cost of sales. So the cost of sales on April, here it is. We take 6,000 units multiplied by 2.57 and 5,000 units multiplied by 2.6, 5. So some of you might ask, what is happening here? Remember the cost of sales? We purchased something, it cost us money. They're using these two issues because there is a 6,000 and there is another issue of 5,000. So we want to find out the cost of sales. We sold these things, but how much did it cost us? Right. And you know how to calculate the gross profit. Sales minus cost of sales. Why are they calculating the gross profit? Why is this question always going to come back? Like I told you from the very beginning, you are an entrepreneur. You need to know if a company is profitable. You need to know if a business venture is profitable. That's the question that will always be there. They will always ask you to calculate the gross profit. So don't be surprised. But why are they asking me? They're asking you because you as an entrepreneur needs to be able to know, to figure out if a company is profitable. And what is the profitability? It's just, you just need to know the sales, how much money we made, but also how much money we spent, the cost of sales. That's all. Straightforward. So please go through the example. Whatever is here, I have put it here. So you don't need to go down and browse down. Everything that comes after is here. I've put it for you here. The inventory systems and the methods, the FIFO and the weighted average. FIFO, weighted average. Right. Rabia, Anuske. So that's all. That's all it's about there. It's just few concepts they want you to understand. And let me tell you, these concepts, as much as you can read them, they are not going to sink in. They're only going to sink in once you practice. There is an example, practice the example and see if you're getting the correct answer. That's all.